Today I will be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So, since the last video, the price action moved up pretty dramatically on a relative basis anyway, pretty steeply. Um, I think that the move down from right here, which I'm calling the end of the E wave, which was a multi-year triangle that began in the year 2009 and ended yesterday, I think. So that's what I'm calling that structure. That's E. And now I believe a trend that's going to last probably some years has started in the short direction, and I'm labeling it as 1, 2, 3, 4, and 5 to make the greater uh, first wave down. Okay, and from this morning's video, I said it could either be that or it could be something else. I wasn't particularly worried about it. I think that this bounce in the long direction, this is probably A. I'm counting this as 5 waves. It's one of those counts where you could easily count it as 5 or 3. There are times in Elliott Wave where you'll apply everything and you can see it potentially working either way. In those circumstances, usually the best thing to do is wait. It will clarify itself. But I think if we zoom in on a smaller time scale, let's say 3 minutes, and now we're simply focusing on this up run, I believe that this is 1, this is 2, this is 3, potentially 4 here with a triangle, and then we have an extended fifth. 1, 2, 3, 4, and 5. Now, when you have an extended fifth, you would expect the retrace to get into that price territory of the internal second. And I'm drawing that retrace zone with the yellow line. So you have, 1, 2, 3, 4, and then 1, 2, 3, 4, 5. So from the terminus of 1 to the terminus of 2 is the second wave's price territory. As you can see, that's exactly what happened. It moved up and it then retraced, okay? Also, you'll notice that price broke this trend line, right? So that's also another really strong indicator that whatever this wave was, it's over. And like I said, I'm calling it A. Now, what I think is going to happen, and this is a 3-minute chart. I'm going to zoom back in, or zoom out, I should say, to a 10-minute chart. What I think is going to happen is we're going to get another move up, and that move up, I believe, will likely kiss that trend line that you see drawn up there. Okay, so we have 1 wave down, and we're going to be looking for wave 2 up. It started to fall dramatically as it broke through the trend line of the channel, right? And I think it'll find resistance as it moves up and touches it. Okay, now in Elliott Wave terms, this cannot be 1 if price moves above this yellow line at 1.5737. And if this low holds here, you can see that, this would be B right here. And then it'll move up in C. And it'll likely come close to touching this trend line and then begin to fall again. And as you can see, that C would be likely a 61% extension of A. That's a I wouldn't say, I don't know if that's fairly common, but you would expect A relative to C, C relative to A to be some sort of Fibonacci relationship. And we'll see if that works out. So that's the smaller picture. Now zooming into the larger picture, okay, so this is the monthly chart. Every bar represents a month. As I said previously, I believe the move in the long direction is a double zigzag. Okay, you've got 535 to here, complex correction potentially here, maybe not, just all depends. It could be 5, and then another zigzag in the long direction to finish Y right here. Now, like I said, from this point right here in 2009, okay, it's been making a triangle, and you can see it right there, A, B, C, D, and now I believe E has finished. And from there, we should get a move that takes us down to at least this 1.1584 line, and the reason why is if this entire move up is an A wave and this entire move down is going to be a B wave, well, in order for B to be, or let me rephrase that, when A is three waves, B is a flat or a triangle, and I believe the price action is showing us that it's going to be a flat. A flat has to retrace at least 90% of A, if not more. Anywhere from 90 to 138% is normal. And as you can see, that yellow line, that was a ballpark, but this yellow line is exact, is where price should fall to at a minimum. It could fall farther than that. You know, if I show you where 138 is 138 is down here at 0.645. So potentially the pound has a long way to go. It could be 4,000 pips. It could be quite a lot more. So if you're going to trade the pound, trade the short, sell the bounces. That's today's call. I hope you'll join me again for tomorrow's call.